Hi, thanks for watching this video. In this video, we're going to be reviewing Fontana's stock. So we're going to look at the annual report ending June 2020. We're going to look at the 9-month financial statements ending March 31st. We're going to look at the PE. We're going to look at the price to book. We're going to talk a little bit about the price history. Don't worry, it's not going to be a technical session. It's going to be very easy to understand. So if you're trying to make a decision as to whether or not you should buy this stock, this video should help you make that decision. We're going to go through all the data that is available to us and look and see what we can determine from that information to say whether or not the stock is worth being shortlisted or not. So, stick around. Feel free to ask any questions in the comments below. Please also participate in the weekly poll that we have on Twitter and on our YouTube channel, where we ask you which stock we should review next. So you tell us which stocks we should review, and based on the stock that gets the most votes, that's the one we review. We're going to talk about some key areas. But first, a disclaimer. So the information viewed here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities, including Fontana. We're going to look at these 4 key areas. So as I said, we're going to look at the annual report. We're going to look at the quarterly financials. We're going to talk a little bit about the price history year to date. And of course, we're going to start with a brief overview of what Fontana Pharmacy does. So you definitely want to stick around. It should be a very interesting video. Let's go. So I'm taking this information. I like to use existing information to share so that you can see that I'm pulling this information from somewhere that you have access to, right? So I try not to say anything that I make up. I pretty much just use the information that's there, right? So this is taken from a VMIL report. So it says Fontana's core business is a sale of pharmaceutical products, but it has diversified its offerings to include brand Jamaica products, health, beauty, and cosmetic items, household essentials, toys, school supplies, and electronics, among other product categories. So they're known for pharmaceutical products, but essentially now they're a one-stop shop for a lot of the products that you use in your home. In terms of locations, they currently have 6, with an announcement to open in Portmore very soon. I think they said by 2023. So that's where they are currently. So we're going to start with the annual report, right? That's where we're going to start. So typically for an annual report, we look at a few key things. So we start with, usually if there's an overview, we'll look at that overview. Next thing that we want to look at is the management discussion and analysis. That's a very key area that we like to pull some information from. In this case, we're not going to go through the financial statements from the annual report because it was June of last year. So it's over a year old. So I'm not sure it makes sense to go through that. Instead, what we'll go through in depth is the quarterly report. But we are going to look at the management discussion and analysis for the annual report because I want you to see where they're coming from. So we're going to start there. All right. Okay, so I would have highlighted some things along the way that I want to focus on. So as I pass them, I'm just going to zoom in, right? So this is taken from the chairman's message. So it says, COVID-19 aside, the most significant achievement was the opening of their Waterloo store with the 35,000 square foot of retail space. It is the largest pharmacy in the history of Jamaica. We also like to think it's the most attractive and aesthetically pleasing retail establishment on the island. I don't know if you've been there. It's actually quite nice. There's a Starbucks, Wendy's, so it's pretty cool. I've been there a couple of times. Let's continue on. All right. All right, so we're going to look at what they're saying here. So this concern, let me see what concern he's referring to here. Okay, yeah. So let me start from here instead. So one of the highlights of the Waterloo store is our Artisans of Jamaica section dedicated to locally made products, a brainchild of CEO Ann Chang. We're committed to supporting local artists and entrepreneurs while offering our customers a wide range of quality products. The success of this section reflects the strong support of our customers as well. Though we never thought it would be an issue, there were some that wondered if the Waterloo branch would cannibalize the Barbican branch. Okay, that's what he's referring to. All right, so this concern turned out to be groundless. And I remember that as well. There was some consideration as to whether or not the Waterloo location would be pulling sales from the Barbican location. They're saying they haven't seen that, right? So the Waterloo Square and Barbican branches were up over 90%, right? So overall, they've been extremely happy with the performance and the continued resilience of the Barbican branch. The performance of the other 4 stores have been also quite healthy. For the first 3 pre-COVID quarters, combined sales of Mandeville, Montego Bay, Ocho Rios, and Savannah Mar were up 7.4% compared to the same period last year. So when you see something like this is a disclaimer telling you that essentially the 4th quarter is going to be impacted by COVID, right? So usually when you see a report being presented in this way, it means that you should brace yourself for something for the quarter that they did not mention, right? The most recent satin report shows that the Jamaican economy declined by 18.3%. So that naturally would have an impact on every business in Jamaica. The wholesale and retail trade fell by 15.6%. Fontana's performance, we are pleased to say, was not as bad, with sales declining 11.1%. Now, this is a contrast that I believe they wanted to show to give you an appreciation for how well they did despite the pandemic. So if the entire sector fell by 15.6 and they fell by 11.1, that means they didn't do as bad as other persons within the same segment. That's good to note. All right. And then I have highlighted over here, our Kingston branches also offer free delivery of goods within certain areas. We offer curbside pickup for purchases, and we offer fully functioning online website shopping at fontanapharmacy.com. Now, I asked some persons from the Learn, Grow, Invest group about this. I believe if it is that you place an order for items $50 and above, you get the free delivery. So that is good to note in case you're interested in their products. All right, so we're going to scroll through. And okay, so this is our management discussion and analysis. So let me zoom in. So this is the year in review, this would have been from June 20th last year, so bear that in mind. So the Waterloo store was well received, and its performance met their expectations and positively impacted the company's financial results in the 2nd and 3rd quarters, right? Again, they're not talking about the 4th because that would have been COVID. And of course, the measures such as the curfews, border closures, and other things would have impacted the business in the 4th quarter. So we already knew that would be happening. In terms of overall, the revenue were up despite the 4th quarter, 21.8%. Profit before taxes were down just 2%. Net profit was up 10%, and assets were up by 65%. Now, I believe what this mentioned was it's due to add a new accounting practice. So I think I would have highlighted something about that. So I'm going to share some details on that later on. And their market cap would have grown by about 10% based on what we're seeing there. In terms of revenues for the financial year, grew by 21% to 4.5 billion. This growth was mainly driven by the addition of the Waterloo store. So the idea that I'm seeing here and the move that they would have made to the Waterloo store, I'm interested to see the impact potentially of the Portmore location in a couple of years, because we know Portmore is one of those locations that is in high demand for new businesses, and a lot of stores and companies are trying to provide services over that area. So it should be interesting if they're adding a store in Portmore for that to possibly impact them similarly to the Waterloo store. So they mentioned that, I believe there's an article I have on that, so I won't get into that too much now. Their marketing efforts bore fruit as their brand awareness grew, resulting in new customer acquisition as well as increased spend per customer. So that's important for us as investors to see that they're saying that their customers are spending more. Now, on the consumer side, then you'd have to manage that on your own. So it's saying the Waterloo store has complemented their other stores and allowed for greater accessibility to their offerings in Kingston. And their three top stores would have been Fairview, Barbican, and Waterloo. It accounted for 68% of their overall revenue. Now, what this means is that you want to look for anything in the future that would impact the performance of these stores, because if it's accounting for 68%, so this 4.5 billion here, 68% of it is from 3 out of the 6 stores. So that's something to bear in mind. So if there's anything that prevents traffic to these stores, it could impact revenues and thereby profits. All right. So their cost of goods sold would have decreased by 2%, and their increase in gross profits were 28.3%. I'm just going to scan through the rest of this here. So this is what I was referring to, right? So their operating expenses increased by 23% to 1.33 billion, directly attributed to the opening of their new flagship location. So the Waterloo store would have added, naturally to their expenses. And noteworthy increases were in staff costs, because they have additional staff, utilities, advertising and promotion for the new location, so billboards, promos, etc. There was also a shift in expenses after the adoption of the IFRS 16 standard, where some of the usual shop rental expenses were reversed and depreciation, operating expenses, and lease interests booked in their place. All right. Then over here, we have net profit. The profit after tax saw a reduction of 9.8%, moving down to 276.5 million, and their EPS of 22 cents versus 26 cents for 2019. And they would have done a 4-cent dividend that was paid in January 2020. I feel like this is so far back, I don't need to spend a lot of time here. This is what I was saying though. So net assets increased by 65%, mainly due to addition of right of use assets for leased properties in keeping with IFRS 16. The growth in inventories, cash balances, and fixed assets is directly attributed to the addition of the Waterloo Square. All right. In terms of their liquidity, their primary sources of liquidity included funds provided by operating activities and loan proceeds. Cash and cash equivalents would have increased. That's always a good sign. And during the year, the company acquired fixed assets amounting to 125 million. So you'd likely be seeing this in the cash flow statements. And they repaid loans of 237 million and paid dividends amounting to 49.9 million. All right, so that's something to note. Whenever a company pays dividends, it comes out of their cash. All right, so we're just going to look at some of the key things, some key numbers here. So they're showing you the last 5 years. So let's do that. So I'm going to focus just on maybe the last 2 or 3 years. So in terms of revenue, change from the previous year, 22%, that's very good. We saw cost of goods sold was reported to have decreased by 2%. Gross profit would have gone up. That's actually very, very significant in terms of gross profit. That's a good sign. Operating expenses would have grown as well. They mentioned that before. Other income. Now, for these details, you'd have to go through the statements and the notes to see what that would have accounted for, but that's a significant increase there. Finance costs, naturally, from the addition of the new location would have been added. And profit before taxes would have, that to go from 106% here all the way to -2. I guess, considering COVID, that you'll take that minor decrease there. Taxation, net profit. So net profit is something to look at. They would have mentioned that decreased by 9.8%. Their EPS from 2016 to now. Net profit margin. So it's usually, between 7 and 8%. For last year, which was a COVID impacted year, it was 6.1%. So you would imagine that if that last quarter wasn't impacted in the way that it was, they would have, probably done around the same. Gross profit margin actually has remained more or less within the same range. Non-current assets, would have increased significantly, 106%. Current assets, 30%. Total assets increased 65%. They mentioned that before in terms of that new accounting practice. Non-current liabilities have increased 8,256%, right? And I'm assuming that this is because maybe they're paying off some loans or something. We'll get to the statement and we'll see. All right, let's look at some of the ratios. Current ratio is 2-to-1, assets versus liabilities. Return on asset, 8.8. Debt to equity, 1.1. Inventory turns ratio, 4.6. So you want to look at this for a company like Fontana. You want to be sure that they're turning over their inventory at a reasonable rate. So I would say, their best year was 3.7. This is 4.6. I mean, that I believe that, coming as far back as 2016, it being 4.6, I guess would be considered reasonable. All right. I believe that's it. We said we'd look at the 9-month statement now. All right, so let's go straight there. So this would be the 9-month statement as at March 31st, 2021. So we're actually going to go through all of this, right? So revenue, so this would be as at March 31st, 2021. Revenues for the quarter were 1.2 billion, representing a 4.2% increase over the same period for the previous year. So that would be for the 2020 year. Gross profit increased by 3%. So you would have gained about a 12 million increase in gross profit from the previous year. All right. So while revenue from our higher margin products would have declined slightly, we saw increases in lower margin product sale, which drove the top line. Now, this is interesting for me because what this is saying is that their higher margin products have declined, but the lower margin product sales drove the top line. So this can be both good and bad, right? So if your higher margin products are selling and selling well, then it means ultimately more profit. If the lower margin products are selling, that means you pretty much have to sell more. You have to sell volume. So they would need to maintain a certain amount of volume to keep it in good shape. So that's one of the things I would definitely want to watch out for. So their continued focus on cost control resulted in decrease of operating expenses of 17 million. That's actually quite a lot, so that's good. I believe they mentioned that they would have made some adjustments to, staffing patterns. So, maybe some employees, maybe instead of working 40 hours, they're working 30, or instead of paying them $10, they're paying them $9, things like that they mentioned in the annual report, or I believe it was the VMIL report. I'll confirm soon. All right, so the 5.2% reduction in operating costs. So they, congratulate their team. Finance costs impacted by foreign exchange losses recorded in relation to the revaluation of lease liability. That's the same accounting standard that would have mentioned. So it led to an additional cost. Net profit for the quarter was 72.9 million, a 337% increase. That is pretty impressive. For the 9 months ended March 2021, net profit was 366 million, or 29 cents per share. So what that pretty much means is that there is a net profit for each share they have outstanding. They made a profit of 29 cents. All right, total assets would have ended up higher. We looked at that already. All right, our balance sheet and significant cash on hand will bolster us through the continued challenges of the current pandemic. And as we see, companies with cash are typically able to weather the storm. So that means is that if, let's say, COVID drags on, longer than we expect, they will be okay because they have cash on hand. They were able to host their New Year's treat for the Barbican community, despite the controls. All right, so let's look at what we're seeing here. So this would have been the end of their financial year last year, and this would be the end as at the end of 9 months ending March 31st, and then this would be just for the third quarter. So what I'll be doing is just focusing on these two columns, right? The quarter performance, I'll talk about that at a later point. So in terms of how they did, in 9 months, they would have done 3.8 billion. For the entire year, previously they did 4.5, right? So if in one quarter they did 1.2 billion in revenues, if they do the same for their final quarter as they did for this quarter, then they would overshoot this by about 10%. That's what I'm getting here. That's a good sign. Cost of sales seem to be, if let's say the cost of sales maintains the same, well, this would be, let me see here, gross profit 1.4. All right, so with that increase expected, so let's say that we use these same numbers here, right? And add this 806 million to this amount, that would put them at 3.2. So you can let's say that you assume or infer that they do the same as this quarter for the final quarter. You're gonna see an increase in cost of sales naturally, because the more you sell, the more you typically pay to generate those sales. With that said, though, they would beat the numbers that they would have done last year in terms of gross profit. That's what I'm seeing, right? In terms of selling and administrative expenses, again, if those if those remain the same. Now, we're not sure if the end of quarter or the end of their financial year, maybe they pay bonuses, maybe they pay incentives. We don't know. We'd have to look at the last quarter, or do they show? We'd have to look at the annual report to see whether or not that's the case. But let's say again that this would be the same here. That would put us around the same amount. Operating income looks to be okay. I'm just looking for anything that stands out in terms of what we would want to focus on. Profit before taxation. So this looks like it's, I'm looking at the wrong year, the wrong column. This is 2020. So let me focus on here, sorry. Finance costs, yes, because I was wondering how come the finance costs would have been so low for this year. Okay, so finance costs. So based on what they would be repaying in terms of financing costs, and we'll see the details of this soon. So this is 118 for 9 months. It was 155 for the entire year last year. Profit before taxation has increased based on where it was last year. So in the net profit for 9 months, right, they're already ahead of the previous year, right? So, and I'll show you when I looked at the pricing chart, a very interesting thing that I saw when they released this report, which I think may hint on a possible similar event happening when the end of year financials are released. And there's the EPS below there. All right, so in terms of assets, let's focus on the highlights. So let's look at the overall number. Ended the year at 1.7 billion in assets. They're slightly below that this time. Let's see what would have caused the major difference. So the right of use asset is different here. That number is less. That number is about 36 million less. So that would attribute to the change that we're seeing in terms of non-current assets. In terms of current assets, that is actually greater. Let's see what that is attributed to. Cash and cash equivalents, right? So they've added 300 million to their cash, right? Based on where they would have ended the year. So overall, they grew in assets by that essentially 300 million. That's what I'm seeing there. Let's look at liabilities. You typically want to see how the liabilities are trending. In terms of non-current, actually decreased here. And in terms of current, it has increased, and that is due to trade and other payables. And of course, this would have increased by about 10 million. And bank and loans payable remain the same. And that's typically the case, especially if it's over a few years. They would have done a dividend payout, as we would have mentioned before. They announced a dividend earlier this year. We'll see that soon. All right, so this is the cash flow statement. Profit before taxation. We saw that already in terms of the highlights. That's very good. All right, so overall, I think that is trending in the right direction. Inventories, they would have spent more. Well, no, actually, based on where they ended the year, that would be at a higher number now. Trade and other receivables. So net cash provided by operating activities have increased slightly from where they ended the year last year. Cash flow from investing activities, that's there. Proceeds from sale of property, plant, and equipment. Cash flows from financing activities. So the dividends paid would be here. Proceeds from loans. And So net cash, so they used 201 million to finance everything that you see here. So the repayment of loan, dividends paid, and other expenses in terms of financing would have been higher. And all of that, all of these different outflows of cash would have led to still at an increased net position of cash at the end of the year. So that is good. There's something here that I wanted to point out. Let me see. All right, yeah. So I think I just wanted to share their loans in terms of what's on their books to be paid. So there's a BNS motor vehicle loan, energy loan, insurance premium, motor vehicle loan, BNS Waterloo Capex. That's their largest item. And essentially that is where they are with that. And these are trade and other payables. Would have seen that earlier. So yeah, I think you can go through that. Finance costs would have increased, they seem, by about 33%. And that's foreign exchange loss. So that's the major line item that would have led to that change in terms of finance costs. And yes, I wanted to highlight these two areas here in terms of top 10 shareholders, just in case persons are holding these two stocks. So Sagicor Select M, they have 10 million units of Fontana in their portfolio, and QAI have 5.3 million shares of Fontana in their portfolio. So that's something to bear in mind. If you're holding these stocks, then the performance of Fontana would have an impact on them. Right. So let us look a little bit now at the performance in terms of price. So this video is supposed to be under 30 minutes. So I'm going to have to go through the rest of this fairly quickly. So I'm going to aim for 35 minutes again. So to find this screen that I'm looking at right now, you go to market data on the Jamaica Stock Exchange website. And what I'm looking at is just the price history for Fontana from January of this year. So it started the year at $5.68. This report would have come out, the one that we looked at, the quarterly report, around this time here. And what we saw was an increase. So let's say it would have traded at about $5.98 a few days before. It went all the way up to $6.34. So that is what I was saying, that based on how well or how well the report looks in terms of some investors, persons were willing to pay a little bit more for Fontana on this day. I mean, it's not a significantly large volume, just 383,000 units. But what I suspect and what we're seeing, they're set to essentially perform better than the year before. So what I think, if you're holding Fontana, if you're interested in Fontana, the price is seemingly gone sideways for the last month. Right. So this, if you're looking to enter into Fontana, now would be the best time based on what this chart is showing. Right. And based on when the report is due, so it's end of June, I believe it's 6 weeks after. So it's due any day now. Right. Let me see when the annual report last year was released. It was released in October, right? The 2020 report. So maybe it's not due any day now. So maybe in about another 2 months. I don't know if this was late. I'll confirm the date. I'm not very good at remembering when reports are due. This would have been their dividend announcement date. Let's see how they did the rest of the year. So the 52-week high would have been $6.50. It ended today at $5.98. So it's just maybe about 10%, Is that 10%? Yeah, about 10% down. They have 1.2 billion shares outstanding. So as I said, if you look at that volume, 300,000 on that day. Now, of course, any amount of volume can move prices based on the fact that you can buy one share. But what that tells you is that a lion's share of the holders have not exited their position, and the largest amount of volume that you're seeing traded for the entire year is 1.5 million. So let us see the performance. I thought this was interesting to see. So this is a section that you can go to see the quarterly returns. So this would be, for 2020, 2021 so far. So Q4 is to be added, and you're already seeing the difference. All right, just by looking at this, you can see the difference. And these are the numbers per quarter. So they beat their numbers for Q1, beat their numbers for Q2, beat their numbers for Q3. So I'm guessing again that Q4 will end to be a better year than it was last year. I think that's very obvious. And these would have been the annual numbers for the last 3 years, right? And this was heavily impacted by COVID. And so this is 276. And this is already 402, right? All right, so the last piece of information that we're going to look at is this one, the Mayberry trade sheet. And the URL is mayberryinv.com/trade-sheets. So in terms of Fontana right now, as at this date, they're trading at a PE of 18.23, and their projected PE is actually lower, right? So PE is price to earnings. So this is one of the ratios that persons look at to see whether or not a stock is over or undervalued. The industry average for retail, I believe, is 23, which means that Fontana is trading below the average for the retail industry, which is a very good sign. So I think that's good. Price to book is 4.23. Dividend yield for this year is 1.34. So I think all signs are pointing to Fontana looking good in the short term. Let me see if there's any other data. Yes, so this analyst report from VM that was released actually November last year, I wanted to point out some key things here. Okay, all right. So what they mentioned here, we know about the impact of COVID. I'm not going to focus there. Acceleration on digital sales challenge, right? So they would have announced a partnership with Blink Sky, a digital gifting platform, to launch Jamaica's first ever digital gift card. So that's something to note. They have a craft market. You would have seen that in the start of the annual report, and they're planning to expand. So we spoke about the Portmore location. We spoke about them increasing their customer base. I believe the report spoke to them investing in increasing customer acquisition. So these are all good signs for Fontana. And let us read the conclusion that they would have had. So yes, this is also important. So for the junior market, for the first 5 years, companies get a tax concession. So they're still within that time. So they get a benefit to pay less taxes. So that is going to make their reports look better up until year 5. Well, up until year 6. So bear that in mind. They have a strong brand. I think everybody knows Fontana Pharmacy. Though they're in a highly competitive space with low barriers to entry, it is actually a market leader. So that's a very good thing to see. In terms of negatives, exchange rate fluctuations, both in terms of purchasing and maybe essentially mainly due to purchasing here, because for a lot of the, for all of the items that are imported, there's going to be impact on that cost to inventory, high staff costs, and director remuneration. So that is something to note, right? And we would have seen some of those loans like a car loan and stuff from the report here. So I'm assuming that maybe for directors, so like that motor vehicle loan, those are probably for the directors and so on. So they would have mentioned that. And as I said, since they're coming up on their Q4, maybe that's when the directors get their bonuses and stuff like that. So that may have an impact. And I won't read this because this would be outdated. All right. Okay. So that is it. Wow. Okay. So hopefully you found some value in this video. Let me know if you have Fontana in your portfolio. Let me just do a quick recap of everything that we covered here. So we did the company overview. We went through the annual report. We looked at the quarterly financials. We looked at some of the price history. So for me, I like what I see in terms of the digital efforts, the focus on customer acquisition. I like the fact that they're expanding another location. At first, I was a little bit torn about it because I'm wondering why they're investing in physical locations when we saw with COVID that, maybe you should invest more digitally, but they're betting on foot traffic for the location. They're betting on persons being willing to purchase locally instead of buying online. So we see that trend increasing where persons are buying online, but we also see trends increasing in terms of their sales doing better. So they're banking that they will have enough unique items, other services like the pharmacy and so on, that you may come in and spend with them as opposed to buying online. So all in all, I would say, they're definitely going to do better than they did the year before. That's what I would say. So since the price is going sideways right now, I think if you're interested in Fontana, now may be a good time to either average down if you're holding at a higher price, or maybe to add to your position or something like that. This is not financial advice, of course. But I think now would be a definitely good time to take a good look at it. If you're interested, speak to your licensed financial advisor. But yep, that is it for this video. Let me know your thoughts below. Are you holding Fontana? Are you interested in Fontana? Which stock would you like us to review next? Let me know. And I want to thank you very, very much for watching this video. And I will definitely see you in the next one.